Are the big banks finally back? Have they become investable again, even with the Fed poised to cut rates and the economy slowing? Let's just say that they've become a lot more attractive here after this week. The big banks that have reported so far, Citigroup, JP Morgan, Wells Fargo, Goldman Sachs, and Bank of America, they have earned a combined total of $29.5 billion. That is astonishing. JP Morgan alone made $9.6 billion. Bank of America clocked at $7 billion. These are extraordinary profits. When you make that much money, your stock deserves to trade at a higher valuation than they certainly have been getting before these numbers. So how did they do it? We're going to take them one by one. JP Morgan is a powerhouse. Every line item impressed me. The best was the consumer, as I mentioned at the top of the show. But the whole thing was terrific. As JP Morgan's firing on all cylinders, credit quality, great. Commercial bank, good. Expenses, very good. Right now, the stock trades at 11 times this year's earnings with a plus 3% yield. People say every stock's expensive. That's a buy. How about Citigroup? They delivered a big top and bottom line beat. They bought back 54 million shares, most of which were purchased below Citi's tangible book value of $67.64. Every share they retire at these levels is additive to earnings, and they're going to keep doing it. This is a $163 billion bank with a 3-year plan to return $62 billion to you. Meanwhile, these guys know how to execute. Citi had a great efficiency ratio, what they actually make, and the headline numbers were fantastic. Best of all, stock trades at 9.3 times this year's earnings, 2.5% yield. Buy. Then there's Goldman Sachs. My alma mater has a habit of crushing expectations on the earnings side. They're not showing enough revenue growth. Not this time, though. This time, Goldman's revenues were massively better than anticipated, driven by some unexpected strength in investment banking and equities. Think underwriting. Goldman stock has long been held back by what I call the episodic, herky-jerky nature of its sales. But with the company focused on building up its recurring revenue, that's now much less of a problem. I think the stock is way too cheap, trading at 9.4 times this year's earnings with recurring revenue, about 65% of their numbers. Goldman's tangible book value is 203. It's at 213. The best for last. Buy. All right, what about Bank of America? It was a small beat, but a beat nonetheless. Some of this company is just, it reminds me of a 24/7 ATM profit spitter. Bank of America has the best digital banking business. 37.3 million users, up from 35.7 million a year ago. A quarter of all consumer sales come from digital, half from mobile. A third of the total consumer mortgage applications came from digital. These are insane numbers. They indicate that it's not just millennials. Even older people are embracing digital banking. That's huge. It's also a great way to keep costs down. Digital banking costs a lot less than person-to-person banking. Plus, Bank of America's massive buyback with the stock trading at 10.4 times this year's earnings estimates. Who can blame them? Buy. When it comes to the major banks, the only questionable quarter came from the troubled Wells Fargo, which just can't seem to get its efficiency ratio down enough. Still, if they would ever bring in a new CEO, who knows? Put it all together, though, and the banks have reported amazing numbers. If you don't buy these stocks, they will buy their shares hand over fist in the open market. Yeah, I've never seen the financials so sound and the executives sound so sanguine with interest rates coming down, which is going to hurt their ability to make money. It doesn't seem to matter. That's why JP Morgan, Citigroup, Goldman Sachs, and Bank of America are all buys, especially what looks like into tomorrow's weakness. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.